Ladies and gentlemen, good day and welcome to Sigachi Industries Limited Q3 FY'24 earnings conference call, hosted by Nuvama Wealth Management. As a reminder, all participants' line will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ranveer Singh from Nuvama Wealth Management. Thank you, and over to you, Mr. Ranveer.
Yeah, thank you. Thank you, Chorus team. So this call is being hosted by Nuvama Wealth and co-hosted by Go India Advisors. I am Ranveer Singh from Nuvama Wealth Research team. I welcome you all. So we have with us the senior management team of Sigachi Industries, Mr. Amit Raj Sinha, who is Managing Director and CEO, Mr. O. Subbarami Reddy, CFO, and Ms. Shreya Mitra, is a Company Secretary. I now hand over the call to the management team for his opening remarks and before the Q&A session starts. Over to you, sir.
Thank you, Mr. Ranveer Singh. Good afternoon, ladies and gentlemen. We are pleased to welcome you all to our Q3 and 9 months FY'24 earnings Concall. In the interest of some of our people who are new to the company, let me first start by giving a brief overview of the company, followed by strategic updates and performance highlights. Our investor presentation would be shortly uploaded. There, I understand that there is some technical glitch. We are in the process of uploading, and I believe in the next couple of minutes we should have that done. Sigachi Industries stands as a global leader in the production of microcrystalline cellulose. This refined wood pulp is a chemically inert substance with widespread application in food, pharma, cosmetics, and polymer composite industries. MCC, being a diluent with self-binding properties, is highly favored as a directly compressible binder due to its dry binding characteristics. Its unique chemical and physical properties set it apart from other excipients, and its compatibility with most APIs, the active pharmaceutical ingredients, is a significant advantage. With excellent absorption capacities, a broad particle size profile, superior compressibility leading to faster disintegration, MCC has earned its position as the most widely used excipient in the pharma industry globally. Sigachi manufactures around 60 different grades of MCC ranging from 15 micron to 250 micron, having varied application in all the pharma, food, nutra, and the cosmetic industry. Sigachi is a significant player in this promising market, presently serving over 52 countries with a global presence. In line with our diversification strategy and a focus on expanding our global footprint, we have incorporated Sigachi Arabia, a joint venture with Saudi National Projects Investment Limited. The strategic moves includes a plan for manufacturing facility at Riyadh within the next 3 years, initially catering to the local and the GCC markets. The company has been experiencing strong growth with a top-line CAGR of 25% over the last 5 years. As part of our strategic plan to scale up operations, we are currently in the process of expanding our MCC capacity by more than 50%, increasing from approximately 14,000 metric ton per annum to more than 21,000 metric ton per annum. This expansion is expected to be effective from Feb 2024. In the last quarter, we also acquired 80% stake in Trimax Biosciences, a leading API manufacturing company based out of Raichur. This, in addition to our existing operations and capabilities, gives us the complete ecosystem of the pharma industry. Additionally, we have initiated establishment of our new CCS manufacturing facility at the Dahej SEZ, a significant step in strengthening our manufacturing infrastructure and augmentation of our production capacities. As a testament of our effective management, we have been appointed by Gujarat Alkalis and Chemicals Limited, Grasim Industries, ONGC Petro Additions, Lords Chloroalkali, thereby significantly expanding our operations and management business segment. Witnessing steady growth, we have achieved a top line of 25.96 crores in 9 months FY'24, and we anticipate this positive trend to continue with an expected revenue of approximately 35 crores in FY'24. On the operational front, in the 9 months FY'24, our overall revenue experienced robust year-on-year growth of 27.5%, expanding from 235 crores to 299 crores. Sale of the products increased by 27% in the 9 months FY'24 to 269 crores versus 212 crore last fiscal. The quantity of MCC demonstrated a notable increase over the year-on-year growth of 12.04%, increasing from 9,850 metric ton to 11,036 metric ton. As part of our commitment to continuous improvement, the company is dedicated to enhancing its R&D capabilities and implementing cost-effective manufacturing processes, reinforcing our position as a manufacturer of choice with the highest quality standards. Our strategic focus on high-margin yielding product mix and efficient manufacturing processes, coupled with effective inventory management, gives us a competitive edge and is instrumental in sustaining our leadership position in the country. I now request our CFO, Mr. O.S. Reddy, to give you a brief on the financial performance. Over to you, Mr. Reddy.
Thank you, sir. Good afternoon, everyone. I am delighted to share the Q3 FY'24 marked a robust performance for us. In Q3 FY'24, our operating income showed a substantial year-on-year increase of 61%, reaching rupees 111 crores. EBITDA witnessed a 61.4% year-on-year growth, totaling rupees 22.6 crores with a margin of 20.3%. Net profit saw a 65.3% year-on-year rise, amounting to rupees 16 crores and a PAT margin of 14.6%. Coming to 9 months FY'24, operating revenue for the period increased by 28.4% year-on-year, reaching rupees 295 crores. EBITDA showed a 29.7% year-on-year growth, totaling rupees 60.3 crores with a margin of 20.45%. Net profit amounted rupees 42 crores with a PAT margin of 14.24%. We'd like to draw attention to the fact that our return on capital employed has seen a declining trend. This is primarily due to our ongoing capacity expansion plans and the increased capital work in progress. The capital work in progress as on FY'23 was 35 crores, and for 9 months FY'24 CWIP is 79.13 crores. However, we are optimistic that the favorable impact of these initiatives will materialize in the upcoming years. As we progress with our strategic expansion initiatives, we are confident that unlocking economies of scale and enhancing operational efficiencies will be key aspects of our future success. These efforts align with our commitment to sustainable growth and delivering long-term value to our stakeholders. Thank you. Now we can open the floor for question and answers, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dhruv Mukesh Bajaj from Smart Sync Investment Advisory. Please go ahead. Mr. Dhruv, please go ahead.
Hello?
Yes, Mr. Dhruv, go ahead with your question, please.
Yes. So my first question that I have is, in terms of growth drivers, specifically in terms of business segment areas, can you provide insights into key factors contributing to the expected growth?
Yes, Mr. Bajaj. One of the prime growth drivers is our focus on the excipient industry overall in the pharmaceutical space, and in the excipient industry catering to our core product of microcrystalline cellulose. uh, uh, as the pharma industry grows, so does the solid oral dosage forms grow. Solid oral dosage form is primarily the tablet and the capsules, and just about all the formulations of solid oral dosage forms, that is tablets and capsules, need MCC for their formulations, and this is what is propelling our growth in the MCC in the pharma space.
Uh, Okay, the next question that I have is how will Sigachi's entry into the market as a CCS manufacturing impact the existing players?
I'm sorry, I didn't get your question. Could you just repeat it again?
How will Sigachi's entry into market as a CCS manufacturer impact the existing players?
Impact the existing players?
Yes.
You mean the customers or the competition?
The competition.
Okay, fine. So what happens? CCS becomes very complementary to our current core product of MCC, because MCC is a binder and it binds the whole tablet together, whereas CCS becomes a disintegrant where it breaks up the tablet at the right point within the body to release the drug. So every tablet which is taken in also needs to have in CCS. So it becomes very complementary, and technically we are giving a range of all the ingredients which go into making a tablet to our customers, and that's a very big value add which goes in, and not everybody who makes MCC or is a cellulose player also makes CCS, because that's a completely different chemistry.
Okay, sir. So 5 years down the line, what's our target revenue mix from our current revenue lines and our API segment, considering we did a major investment in Trimax of 100 crores for 80% stake?
So 5 years down the line, I think we believe we will continue to be primarily a pharmaceutical company. We believe 70% or more of our revenues would continue to come in from the excipient and the API space. The balance 30% would be from the food and nutrition and operations and management.
Okay, sir. So I have two more questions. So next question that I have is your company was expected to commission MCC plant expansion in Q3. So have you achieved that expansion? And if yes, what is the revenue potential?
The capacity expansion is already underway. We are having commissioning trials running, the wet and the dry trials. After that, we will have the material trials commenced. In terms of potential, I would just like to indicate that from a 14,000 tons capacity, we would be increasing it to 21,000 tons capacity. So you can gauge the revenue potential which comes in just by having basic maths in place.
Okay, my last question is, what's your views on equity dilution, considering you have raised a round of funding within 2 to 3 years of IPO?
Views in terms of equity dilution, I'm not sure what is it that you would want to hear, but my focus is the growth of the company. So whichever way it comes in, it's important that there is a growth coming in, and all the stakeholders, whether it's the shareholders or the people, I mean the customers or the employees, everybody kind of gains and has potential to grow within the company and outside the company. So I mean that's the prime focus at this moment.
Okay, sir. Thank you.
Thank you, Mr. Bajaj.
Thank you.
Thank you. I would like to remind participants, if you wish to ask a question, please press star and 1 on your touchtone phones. We have our next question from the line of Abhay Jain from Hem Securities. Please go ahead.
Hi, sir. Thank you for providing the opportunity. My question is, are we sticking to the guidance of achieving 25% of the utilization of additional capex in Q4 FY'24?
In my last Concall, I had indicated that 25% in the first quarter would be a very tough target, and I had indicated it would be 10%. Subsequently, it will be 25%. So I believe in the Q4 we should be having an additional capacity of 10%. I mean additional capacity from the new capex which is put in, and in the Q1 of the next financial year we should be comfortably touching at 25%. You see, because one part of the month is already lost in terms of commissioning and equipment trials. It is partly commissioned, but we are not really in a position to deliver the sellable goods. So I believe 10% would be a fair mix to take in.
Okay, sir. Just a humble request. And sir, moreover, can you also provide us the percentage utilization of additional capex in the upcoming quarters? Say, suppose for the Q1 FY'25 and Q2 FY'25, if you have the numbers with you.
So, in terms of additional capex, we have the CCS project where we were looking to have the environmental clearance by December. I see that there is a delay, and the committee has not yet cleared the file. We are expecting that the file gets cleared by mid-Feb. So, in case that happens, by March we should be able to deploy our capex into the CCS project. So, in over the next 18 months, we should be able to completely commission and kickstart the commercials from that particular CCS project. So, I believe over the next 4 to 5 quarters, we should be able to deploy all this capex of CCS.
Thank you, sir.
Thank you very much, Mr. Jain.
Thank you, sir. Before we go ahead to the next question, I would remind participants you can ask questions by pressing star and 1 on your touchtone phones. We have our next question from the line of Vilina Jain from Perpetuity Ventures. Please go ahead. Yes, ma'am. Please go ahead.
Yeah. So I have 3 questions. First is, beyond India, which specific export markets are you targeting for CCS sales? What strategies do you have in place to secure the competitive pricing and market share in your chosen export markets? And lastly, how will you balance meeting domestic demand with your export focus? Thank you.
If you can just repeat the last one, domestic demand.
So with your focus on export markets, how will you balance meeting the domestic demand?
Okay. So, in terms of meeting the global demand and the domestic demand, it's a very fine balance in terms of catering to our old customers and seeing that we are able to cater to their needy demands, and also catering to our high potential, high realization sales across the globe in the regulated market. I'm sure all of us are aware that in India, in the domestic market, the realizations are not as good as what we get in the regulated markets. So historically, we have been having 2/3 of our revenue coming in from the export and 1/3 from the domestic. We believe even with the advent of CCS as a product coming in, we would continue to have this kind of sales in terms of domestic and export. In terms of pricing strategy, I would say it's a very good question. Pricing strategy when you are launching a new product is always competition driven. So when you launch a product, you have to beat competition and you have to price it so that the customer has a reason to buy in and you have a leg in the door. And once you are kind of there, you can show in your strength in terms of quality, in terms of service, and gradually have a better share of the wallet from the customer. I believe this is the overall CCS sales strategy as well, because our network of distribution and end customers across the 55 to 60 different countries is already established, and in many regions and countries we have cemented relations with our customers. So giving them an additional product from our portfolio would only kind of complement and add more strength to our relation. I hope I answered your 3 questions, Ms. Jain.
Yeah, I have one more question. So with
Sure.
the acquisition of Trimax, is this the first step towards forward integration?
No, I wouldn't call it a forward integration, ma'am, because the Trimax is an API manufacturing facility. We are making sure both our customer profiles are the same. I mean, Trimax earlier also was selling to formulators, the guys who make the tablet and the capsules and any other liquid syrups or other cosmetics. And we were also selling our excipients, or so to say, the inactive ingredients to the formulator. So our customer profile continues to be the same. So it's not really a forward integration.
Got it. Thank you.
Thank you, Ms. Jain.
Thank you. Before we go ahead, I would like to remind participants, if you wish to ask question, then press star and one on your touchtone phones. We have our next question from the line of Muthu Kumar from Fidelity Venture. Please go ahead.
Good evening. Thanks for the opportunity. Yeah, I am one question. What is the CapEx did you have spent for financial year 23 and CapEx plan for financial year 24 and 25 financial year? Thank you.
Yeah, thank you, Mr. Muthu Kumar. This CapEx for 24 almost we have spent around, for 24 it will be around 100 crores. And FY'25 also it is around 100 crores would be there.
Okay, and financial year 23?
23 it is in CWIP 35 crores is there. Some capitalized or some 15 or 20 crores are there. Around 50 crores, 55 crores.
Thank you. All the best.
Thank you. Thank you, sir.
Thank you. Before we go ahead, I would remind participants you can press star and one if you wish to ask question. We have our next question from the line of Devan Shah from iWealth Management. Please go ahead.
Hello, sir. Am I audible?
Yes, Mr. Devansh. Please go ahead.
Yeah. So just wanted to know the realization for the MCC, sir.
Yeah. MCC, thank you, Mr. Devansh. MCC realizations, FY'23, it was around 208 rupees per kg. And FY'24 also it is not, there is almost, it remains same, but quantity there is an improvement is there. Quantity, there is a good improvement is there in price.
So right now we are at a capacity utilization of?
Utilization of almost 95%.
Okay, and so just wanted to know the growth drivers behind the sales growth of 61%, sir.
Yes, that is because this quantity increase is there, one thing, and also there is a contribution from our API little contributed for this growth, and also our subsidiaries, Sigachi, US also contributed, and O&M also it is, there is a good growth rate is there in O&M. If you remember, FY'22, our O&M revenue is 13.29 crores, and FY'23 it was 26.59. This year we'll be reaching around 35 crores, and yeah, that is a good growth is there from the other segments. And this MCC also, after expansion, our this thing good revenues we are expecting. Even margins also, we are focusing on.
What kind of growth can we expect?
The growth almost not less than, we hope it is 33%, around 30%.
Got it, sir. So just one last question. So how much, if you could just tell me the quantity, production quantity for this quarter for MCC?
MCC this quarter, as for 9 months, it is around 11,036 metric tons, whereas in corresponding previous year 9 months, it was 9,851 metric tons.
Got it, sir. Thank you so much, sir.
Thank you, sir.
Thank you, sir. I would remind participants
sir,
to press.
one small announcement, sir. We have the results have been uploaded.
I would remind participants to press star, then one if you wish to ask a question. We will have our next question from the line of Sriman Marayana, an investor. Please go ahead.
Yeah. I would like to ask 50 questions now. First question is now, what is your market share in the Indian industry, and globally, what is your position? And the second thing, you have capex of about 200 and odd crores. But what is the funding plan for these things?
Yes. Sir, you were not completely audible. Market share in?
Market share now, your market share within India. And what is your ranking
in which segment or product are we talking of, sir?
Your base product, that CCS, that one?
CCS is the product which we are yet to commence our production. MCC is our core product, sir.
Yeah. What is your market share within India?
So market share in India, I would say that at this moment, market share percentage, I think, is a very tough call to take, because there are a reasonable level of imports coming in, and for the regulated market from where it gets exported to the finished product gets exported. However, in terms of installed capacity in India, I would say we are the number one player in terms of installed capacity. Our current volume, what we sell, is the highest by any player within India, and once we have the additional capacity coming in, touching nearly 2,000 tons per month, that would cement our position as the number one player in India, sir. Market share percentages we don't really have data which one can call authentic to be able to tell it on an earnings call. What was the second question, sir?
Who are your competitors?
Competitors, we have a player by the name of JRS Pharma and Gujarat Microvax Private Limited, based out of Gujarat.
Okay. Regarding now this 200 and odd crores of capex now that is happening now in current financial year and the next financial year, what are the sources of funds for that?
Yes, sir. Thank you, Mr. Srimanarayana. This capex, already we have issued share warrants were allotted for the tune of 286.45 crores, and that is already the objects for that is 160 crores towards acquisition and expansion of API facility, that is Trimac Biosciences at Raichur, and 50 crores, that is Dahej and Jagadia expansion, part of for the expansion we'll use, and augmentation Hyderabad unit, 22 crores we'll use it, and there is a working capital and general corporate purposes there.
No,
mostly the funds are earmarked from this share warrants, and also the CCS already around 33 crores it is available, and further we have the plans of maybe through retained earnings or some further capital or debt will rise. That will take it.
Yeah. To whom these share warrants were issued?
Share warrants, it is issued to the group of investors. Even promoters also contributed, promoters and the management.
What are the conversion terms? What are the share premium?
That is share warrants, that is standard terms are there 18 months from the date of issue, but all the investors, as per the requirement of the company, they will infuse into the company.
No, but is there any agreed conversion terms for that, or?
There is no agreed, but as per the requirements of the company, the investors, they infuse into the company.
Okay, but now what is the present capital as of 31st December then?
In 31st December, 30.7 crores is the capital, 31.7 crores.
Okay. Now, suppose now these warrants are converted. Now, what would be the likely capital, equity capital?
On fully diluted basis, that would be around 41.7 crores.
41 means now?
30.7 plus 417. Yeah, 41.7 crores.
41.7 means the rest of the thing will go as a share premium, or how it will?
Yes, share premium only. Share premium. This is equity shares, number of equity shares. and we have issued at 261. That was before conversion. Means after conversion that would be 26.1.
But now I think now it is how it compares with the present market price now. Suppose the premium now what you are going to collect.
That is already at the time of issuance of share warrant itself. The premium also, as per the SEBI guidelines, it was calculated and issued.
What is the per share premium now that you will be getting?
Premium we'll get that 251 was the share premium.
251 compared to the okay, that is very high now. That compared to the present market price of say around 75. Is it correct now? That are you sure now that you are getting 200?
Yeah. Already it was issued some time back, and as per the SEBI calculation, that is the way any company issue the share warrants.
What is the face value? 1 rupee?
10 rupees. That time 10 rupees. 250 rupees was 251 rupees was the share premium, and 10 rupees was the face value.
Then your dilution is going to be very advantageous to the new shareholders. Then today it is now 1 rupee share is quoting. 1 rupee share is quoting at 75. Isn't it correct?
Sir,
Mr. Shriman, I would request we keep our discussions to the operational review. I think that's more meaningful. Anything to do with the norms, I would say that we are all following the SEBI guidelines, and we are all complying that. These debates are not really fruitful in the overall interest of all the members who have joined for the earnings call.
Okay, but it has got an impact finally.
It is positive. It is beneficial to the company only. Positive impact all the even shareholders also. That is good.
Okay. Now, how to get the additional information? Suppose if it is required, if you are not interested in sharing now.
No. It's not the question of not interested, but the interest of the other larger group of the.
No, that's what I'm telling now. How to get the information now? How we will share the information if you are not interested in sharing that information right now.
Yeah, okay. Just you please go on. Just quickly we can conclude in the interest of the other members, please.
No, my question is
now,
for 10 rupees share.
One more. Your question is. Your question is the management company is not. Management is not diluting the share capital. They are holding. They are also even there is no offer for sales at the time of IPO or even now also. It is. Positive to the company.
Okay, otherwise you tell me now the documents you filed, the reference I can go through that.
Yeah, already everything it's available. Even later on if you want we can provide it also. It's already submitted to the exchanges. Every complete information it is available, sir.
Okay, right.
Please, yeah. And one more thing at the in the interest of the members, already the results were uploaded. That is for your kind information.
Thank you, sir. I would remind participants to press star, then 1 to ask a question. We have restricted 2 questions per participant. As the next question is from the line of Dilip Kumar, an investor. Please go ahead, sir.
Thank you very much for giving me opportunity to ask few questions about this company. Though I am little new to this company, I have been just tracking this company in the last couple of months. So I would just restrict my questions to very few questions, and I would not really like to just waste time with some basic questions about the company asking. So I had gone through your presentation, previous one, and even now the current presentation which is before me. Most of the things what I can understand, I have the information. Few things I do not have information. I do not know whether it would be a right forum for you or MD to share that information. If not, possibly I can write separately later on if possible. The first question is that see, this your product is a excellent product, excipient product, which goes to the pharma company as a binding and for some kind of reaction, which does not change the property of all other things. A very good product, definitely. But the kind of sales you have, which is 75-80 crore rupees per quarter, this amount as a input cost to the whole, pharma sector seems to be quite not very significant kind of amount. So my query is that since there are a very large number of pharma companies, the total turnover of the pharma is very huge and the input cost also very large. That means it is some percentage of that. So I could feel there is a large amount of import is there, which you can clarify in number one question. My question is that. Number two is that if this product used primarily for your pharma product, then I can see there is a huge opportunity and growth for your company because this is one of some important ingredient goes to the pharma again. So if you can could kindly just tell me that how much is your moat in terms of others getting into this product? These are the very two questions I have just posed. If you could kindly.
Thanks for your question, Mr. Dilip Kumar. Appreciate you being very frank in terms of your knowledge of the company. We'll be very happy to answer them. In terms of others getting into this product line, I would say pharmaceutical industry is a very closed industry in terms of accepting or taking in a new vendor. In terms of technology, I would say that it is very difficult, precise depolymerization which happens with the cellulose chemistry here. So it's not really very easy for somebody to set up an industry. Of course, it's very capital intensive, and once you finally have the product, it takes nearly 1.5 to 2 years for any good player to be able to put it into a formulation, check the stability of the formulation, and then have the formulation registered into any other markets. That answers your second question. In terms of the first question,
regarding import.
Import, yes. So there are a reasonable, there is a reasonable quantity of this product being imported from the world leaders, precisely the world number 1 and world number 2, and some of the big pharmaceutical formulators and their customers, they are importing it for the finished formulation which go back to the regulated markets. So, if I am a big pharma company and I have a product registered in the US, which uses an excipient, which uses an MCC from a player in the US, I have to import as per the formula which I have submitted to the US authorities. I can't change the formula, or even if I have to change, there's a lot of paperwork, there's a lot of cost involved, and we have seen that the customer stickiness with these products are very high because these are high volume, very low in value. So if the API...
Yeah, yes. I understand that point, but then I would have been little more curious to understand, your customers, are they the top pharma companies like Sun, Lupin, all the big things, or the below that?
No. Of course, if we are the number one in India, we ought to be having all the bigwigs of the pharma company. We also have the bigwigs of the global level companies. We have GSK, AstraZeneca, Sanofi, Servier, Pfizer, all these, Dr. Reddy's, Cipla, Lupin. So, naturally, all of them require these products, and they want assurance of supply, assurance of quality, and regulatory compliance so that they don't default.
So it depends, like one company having 1,000 types of tablet, maybe 10 tablets they use your product, maybe another tablet they use for their import kind of things like that. So that is how I think probably it is done, right?
Yes, that's right.
Okay. Thank you very much. Thank you,
Mr. Dilip Kumar.
Thank you, sir. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to join the queue. Next question is from the line of Shivaji Mehta, an individual investor. Please go ahead, sir.
Hi, thank you for the opportunity. I had a question regarding the MCC product. If you could give us some color regarding how is the demand supply situation globally, and are there some new capacities that are coming up globally which could probably impact the realization going ahead?
Thank you, Mr. Mehta. In terms of demand supply situation, we don't see an abrupt change either in terms of increase in demand or a decrease in supply, because the pharmaceutical market and the pharmaceutical industry is humongously big and quite stable. We had seen a big change during the COVID times, but from the last 2 years it has been quite stable. MCC per se, we have market reports indicating that the global increase would continue to be between 6 to 7%. In the Asian region, the global increase of consumption of this market or the size of this would be around 8%. So this is the overall, increase in demand, and I believe supply also continues to be kind of trailing these volumes and these demand.
Right. So basically, the realization is expected to be very stable going ahead.
Yes.
And so my next question is regarding the asset turns. If you could just give some color regarding the new products that are coming up in CCS and also in MCC, the new capacity that is coming up. How will the asset turns really pan out? If you could probably give us granular regarding CCS and MCC, or if you could give us an overall company level asset turn that you expect going ahead.
CFO, would you like to just answer this?
Yes, sir. Thank you, Mr. Shivaji Mehta. This asset turn, earlier it is asset turnover ratio maybe around 2.5% is there. Gradually it will increase to more than 3 times. And because now it is under the expansion stage, and then we are deploying capital, and then all the capacities comes into operational, it would be around more than 3 we can maintain.
Oh, that's great. And just one final question regarding margins. How do you see that trajectory? Because you're getting into CCS, and also as your asset turn get better, your operating leverage will kick in. So how do you see that margin trajectory really going ahead?
In the CCS, it gives better margins than the existing MCC, and margins also it is tend to improve further. Even EBITDA levels slightly is.
Mr. Mehta, I would also like to add here that we have taken over Trimax Biosciences. They have a US FDA approval for intermediates. However, we are working to see how we have API approval also coming in from the EU region, European Union, and certain Latin American countries. So initially in the API segment, our margins would not be as great, but once we have the regulatory approval coming in, I believe our market should be positive of 20-22%.
20-22% for the whole company going ahead is what you're saying at EBITDA level?
No, at this moment, while I spoke, it was primarily for the API, but I believe that we should be positive of 20% for the whole company as a whole, and only get better as we move ahead in terms of contributions coming in more from the API.
Okay, great. Thank you so much, and wishing you all the very best.
Thank you so much, Mr. Mehta.
Thank you.
Thank you, sir. We have our next question from the line of Siddhant Jain, an individual investor. Please go ahead.
Hello, sir.
Yes, Mr. Siddhant.
Hello. Am I audible?
Yes.
Yeah, thank you for the opportunity. So, as you mentioned that you are the largest manufacturer of MCC in India. However, I can see in the presentation that you have major market locations in India, US, Australia, and Sweden. So, as far as US, Australia, and Sweden goes, right, what risks do you pose by the local MCC manufacturers in there, and do you see a risk of customer getting swayed by the other manufacturers?
So the regions you spoke was US, Sweden, and Australia.
Yeah, because the majority of the customers lie there.
Okay. What I would like to indicate is that we don't have any MCC manufacturer based out of Australia. Australia imports all their MCC from suppliers either in the US or in the Asia region. In Sweden, we don't have any. However, we have couple of manufacturers in the EU region. In the US, we have couple of manufacturers. So risk in terms of supplies coming in from local, yes, I would agree that there are risks. However, there are inherent advantages from our customers who are looking for stable supplies at reasonable pricing than the US manufacturers. And to top it, when you have relations spanning 2 decades, that until there is something which really falls apart, the customer is not going to go away, because you have been servicing them at a certain level of comfort. They're having good payment terms and commercial terms between both the sides. There is not much reason that the customer would want to look at somebody who is a local supplier.
Okay. Thank you for the answer. And just a follow-up question. So,
Sure.
the pharma industry being a very running on the trust basis, and the terms being very complex. So, do you see any new customer, even the big ones, being onboarded in this next quarter or so?
So, Mr. Jain, I mean, new customers, that exercise is always part of our game plan, always part of our sales and marketing strategy, business development strategy. We have a twofold strategy in terms of customer acquisition. I mean, in terms of growth and customer acquisition. The first one is that whoever are our current customers, how do we have a bigger share of their wallet? How do we kind of have products which align with all their needs? That's number one. Number two, to work out to see how do we have more customers coming in to us and taking Sigachi as an alternate vendor and gradually building up our strength to have a bigger share of their wallet. So with these two strategies in place, we always keep balancing out and gradually the C and the D grade customers, the low end customers where the payment terms, the pricings are not as good, or there is geopolitical situation coming in, we gradually keep purging out these set of customers and keep having better customers, so that effectively over a couple of years, our customer profile only betters.
Okay, got it. And I have one more question. So that is on the stock split that took place. So I am an investor since the IPO. I got allotted in that. And then I read the financials and found it to be very good. Any particular reason, like what was the motivation behind the stock split? Because you being a very small cap company, it didn't seem to me that you should be doing that at this point, since the stock would have been cheaper now, and the number of investors would increase, and the liquidity would definitely increase, and the pledging amount has increased as well for the promoters in between.
So my understanding of your question is that you didn't find the stock split the best. The best move forward.
Yeah, and more probably the pledging part, I didn't get. Why was that done?
Yeah, Siddharth Jain, this is all the advantages of splitting you spoke, and this pledging was done for further investment to raise money by the promoter. That's all, and infusion into the company only. There is no other
okay
behind that.
Thank you. Yeah, that's it.
Thank you,
Mr.
sir.
Jain.
Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. We have our next question from the line of Raj, Urge of Partners. Please go ahead.
Hi, am I audible?
Yes, sir. Please go ahead.
All right. So, sir, you have done a capex of 100 crores for FY'24 and 100 crores for FY'25. So you are saying is on 200 crore of capex, you will be able to do a max sale of 600 crores.
Already existing, yeah, Mr. Raj, yeah, that's all. Or you wanted to ask any further questions? Can I proceed to answer your question?
Yeah.
Yeah, this is actually this is 100, 200, and three times you have taken capital this thing asset turnover, and based on that you are asking, or what is your expectation? What is your complete question? Can you please?
To the earlier participant,
Yes.
you said you would be able to do a 3x of asset turn. So on the basis of that, I'm calculating.
Yeah, this is only investment in FY'24 and 25. These fruits immediately it will not come, because if we invest in FY'25, if we start investing, and then it will take capitalization, and then even the validations will take, and the existing investment already we have done. That gives, plus in addition to this expansion capacities will give further revenue.
Understood. And sir,
growth will
how much time will it take for us to achieve 600 crores of sales in future?
Can you please repeat which the amount I didn't get you.
How much time it will take for us to achieve this peak sale of 600 crores in future?
600
will it be
crores,
3 years,
see,
4
right
years?
Now, right now, see already 300. Last year we had achieved 302 operational income is there. This year around 300 already achieved in a period of 9 months itself. Last year 12 months revenue we had achieved in 9 months itself, and almost the fourth quarter also comes in. 600 crores turnover is not far away. It is close, but yeah, that is a futuristic statement. We hope it will be achieved very soon.
What I could add in, Mr. Raj, is that historically we have data to show that we have been growing at a 25% CAGR. This year, I believe it would be a bit more than that. For FY'24-25, because of our capex kicking in, because of API coming in, I believe we should be able to touch a comfortable 30% growth. So just doing basic maths, I believe in the next financial year, I mean 25-26, midway by the financial year, or somewhere towards the closure of the financial year, 600 crores should be surpassed.
Understood. And in FY'25, will you be able to increase your EBITDA margin?
Yeah, that's a very tough question. We are working overtime to see that our API vertical contributes positive of 20%. At this moment, because the products what we see have potential markets, they don't contribute positive of 20%, but we are doing the groundwork to see that the CEP is applied, and there are certain NVISA approvals which are done, and that should give us headway into the regulated markets. And with that, we should be positive of 20%. So over a 2-year period, you should see us being much ahead of the basic 20% at which we have always been.
Understood. So expansion in EBITDA would only come from the API company which we have acquired, right?
No, expansion in EBITDA will also come in from the capex which turns around. From the end of Feb, we should be having sales of our expanded capacity of MCC as well. So it should also come in from that.
Understood. All right. Thank you so much.
Thank you, Mr. Raj.
Thank you, sir. We have our next question from the line of Mr. Ranveer Singh from Nuvama Wealth Management. Please go ahead, sir.
Yeah, thank you for taking my question. And quickly, 3 points actually wanted to clarity on. One is that we mentioned that total production has been 11,036 metric ton, and the total capacity is 14,000. So that comes to around 78% of capacity utilization. So I'm calculating something. If my calculation is right, or we are missing something?
So production calculations are right. Possibly the 14,000 metric ton what we speak of is incorrect, because we have been at nearly 90% capacity utilization.
Okay. Okay. And secondly, I think we spoke to one of the similar player, your competitor, some time back, and I got to know that wood pulp prices has come down significantly. So, have you also witnessed this trend for
No,
MCC products?
actually, Mr. Ranveer Singh, we have seen the opposite. The pulp prices seem to be going up. From the last couple of months, we have been stocking up. CFO has been, increasing his working capital structure to see that we kind of stock in more and more of pulp because the pulp prices are shooting northwards. So I don't believe that the pulp prices are actually decreasing. The pulp prices are in fact actually going up.
Oh, so what is, if you could give any indicative number, what kind of currently the world prices is prevailing and versus last year, even if this is similar, so just that will give some idea because
No, but
realization anyway we have.
Mr. Ranveer, pulp prices vary on pulp mill to pulp mill. It varies on the wood species to wood species. Varies on the pulp quality, the brightness, so purity levels. So there is a lot of functions which come in terms of pulp prices. The quality which I buy, maybe my competitor might not buy. He might buy a cheaper version of it. So it's very difficult to have a apple to apple comparison to see as to if my pulp prices are going to be so and so, what is the pulp price going to be for somebody else. But overall, one thing is there that for the whichever way the inherent industry has been, or whichever way the geopolitical situations have been in the Middle East, the pulp prices has seen a reasonable increase. And we are doing all that it takes to see that we pass on the price increase percentage to our customers, because everybody is aware that there is a change.
Okay, fine. And the last one, that the acquisition we did for API. So in this quarter also some contribution. How much contribution is from that API business?
We believe it should be the same value as what we have had in the third quarter. So somewhere around similar value, sir.
Okay, but this is the integration is complete. There is nothing pending on that acquisition side.
No. Integration is complete. However, certain SOPs what is followed, certain HRMS systems, the human resource management systems that are followed in Sigachi, that would take time to go in, because they have a different formula for overtime, they have a different formula for compensatory off, they have a different formula for everything. That, because people processes would take time, we don't really want to rush into that, because everybody is averse to change. We will take time, but on the product part, everything is aligned. On the SAP part, everything is aligned.
So for FY'24, that full year would be consolidated from this API business.
Yes. That's right.
Consolidated.
Okay. And similarly, we had that O&M services with Gujarat Alkalis and that ONGC. That contribution from that partnership is also there in this quarter, or what's the status there?
Yes. Every quarter, that is a continuous projects are going on, and then continuously we get revenues month on month.
Okay, fine. I think say time constraint also. It's all from my side. Thank you.
Thank you, sir. Due to time constraint, that was the last question of today's conference. I would now like to hand the conference over to Mr. Amit Raj Sinha for closing comments.
Thank you. Thank you all participants for being part of this earnings Concall. I hope we have answered your questions satisfactorily and at the same time offer insight into our business. If you have any further questions or would want to know more about the company, please get in touch with our investor relation managers at Go India Advisors. Thank you and have a wonderful day.
On behalf of Nuvama Wealth Management, that concludes this conference. Thank you for joining us, and you may now disconnect your